Please hit the like button and subscribe so you never miss a daily report. The numbers at the close. Today was a down day. The S&P 500 fell approximately 0.5%. The Dow dropped approximately 252 points. The Nasdaq 100 declined approximately 0.7%. U.S. equities were firmly lower as Treasury yields rebounded, and Nvidia's results, while strong, failed to extend the AI rally. Yesterday, Wednesday, was the strong day. The Dow rose 621 points to close near 49,985, crossing 50,000 intraday. Today gave back some of those gains. The market that surged on Nvidia optimism Wednesday is now digesting the actual results with more scrutiny. Nvidia, the real verdict. Last night, Nvidia beat on revenue and earnings. But here is the critical nuance the market is pricing today. Nvidia's Q2 guidance came in strong, but did not meet the upper range of analyst estimates that had been common in past quarters. The market had become accustomed to Nvidia not just beating but dramatically exceeding the most aggressive forecasts. When the guidance came in solid but not extraordinary by Nvidia's elevated standards, investors took profits. Nvidia shares hovered near the flat line today, essentially unchanged despite the earnings beat. That is the market's verdict. Good quarter. Not a blowout relative to the whisper numbers. The AI trade is validated, but the stock needed a bigger beat to surge from here. The most important detail from the earnings call that investors are processing: Nvidia increased its dividend. A dividend increase signals management confidence in sustained future cash flows. That is genuinely bullish for long-term investors, even if it did not drive a short-term pop. Today's big losers. Intuit crashed 15%, one of the worst single-day performances in the S&P 500 today. The financial software company announced it would reduce its workforce by 17%. Workforce reductions driven by AI adoption are becoming a recurring theme this earnings season, and the market's reaction has been unpredictable, sometimes rewarding the cost savings, sometimes punishing the signal of underlying weakness. Today, it punished Intuit hard. Walmart fell approximately 2% after beating headline earnings metrics, but warning that higher fuel costs may hurt the business if sustained for longer. Walmart is the most important consumer bellwether in America. When Walmart warns about fuel cost pressure, it is telling you that inflation is squeezing the company that serves lower and middle-income Americans more than any other retailer. That warning is significant. Salesforce dropped approximately 4%. Sherwin-Williams fell over 6%. Today's winners. Goldman Sachs shares hit a record high today after reports that the investment bank will lead SpaceX's IPO. Being named lead underwriter on what could be the most anticipated IPO of the decade is a significant revenue and prestige win for Goldman. The stock responded accordingly. IBM gained approximately 3.7%. Boeing rose modestly. Chevron and Honeywell were among the other gainers as defensive and energy names attracted buyers rotating out of technology. The Treasury yield pressure. The bond market remains the dominant structural force pressuring this market. Optimism over restored exports of Middle East energy eased from yesterday's session, lifting yields and pressuring broader equities. The 10-year Treasury yield rebounded toward its recent highs after briefly pulling back on Iran deal hopes yesterday. Here is the dynamic investors are navigating. Every sign of Iran deal progress sends yields lower and stocks higher. Every sign of continued conflict sends oil higher, inflation fears up, yields higher, and stocks lower. Until there is a genuine resolution, this seesaw continues. The SpaceX IPO. The biggest story developing. The SpaceX IPO is rapidly becoming the most anticipated market event of the summer. Goldman Sachs leading the offering is significant. It signals the bank believes it can place the deal at the highest possible valuation with institutional investors. SpaceX filed its prospectus this week. The IPO roadshow is expected to begin soon, with pricing potentially as early as the week of June 1st. At a valuation approaching $350 billion, this would be one of the largest IPOs in history. For context, SpaceX generates real revenue from its Starlink satellite internet business and its rocket launch contracts. This is not a speculative startup. It is a profitable business with government contracts, commercial customers, and a dominant position in commercial space launch. Every major brokerage and investment bank will be competing for allocation in this IPO. Watch for the roadshow details carefully next week. What to watch tomorrow? Tomorrow is Friday, which means our full weekly breakdown here at Capitalists versus Consumers. This has been an extraordinary week. Musk losing the OpenAI case, Trump calling off an Iran strike, Nvidia earnings, Walmart's fuel cost warning, Intuit's workforce cuts, and the SpaceX IPO developing rapidly. Also tomorrow, any developments on the Iran situation. Negotiations are described as being in the final stages. Any announcement over the weekend could open Monday dramatically higher or lower, depending on the direction. The bottom line, today was a reminder that even extraordinary earnings do not guarantee stock price gains when expectations have been priced to perfection. Nvidia beat. The stock went nowhere. The market needed more. For long-term investors, this is not alarming. Nvidia's business is exceptional. Revenue growing 69% year over year. Data center demand extraordinary. Dividend increased. These are the fundamentals that matter over years, not days. For people watching the consumer picture, Walmart's fuel cost warning combined with Intuit's workforce cuts paint a nuanced picture. AI is disrupting employment. Fuel costs are squeezing consumers. The K-shaped economy is not improving. Stay diversified. Stay consistent. Tune in tomorrow for the full weekly breakdown. That is your After the Bell for Thursday, May 21st, 2026, here at Capitalists versus Consumers. Please hit the like button and subscribe. Turn on notifications so you never miss our daily report or weekly breakdown every Friday after the close. We will see you tomorrow. Affiliate links. Small commission at no cost to you. Educational purposes only, not financial advice.